If you have a pension from your employer, there's a chance that you've already received or will receive a letter in the mail offering to give you a lump sum buyout in exchange for the rights of your pension. It's a move often employed by companies to cut down expenses and lessen long-term liabilities on their books. Retirement planning involves many critical decisions, one of which is how to manage your pension. Whether you're near retirement or are already receiving ongoing pension payments, you may have that option to choose a lump sum distribution buyout instead of a lifetime stream of payments. This decision can significantly impact your financial future and retirement lifestyle. Several factors must be considered in order to determine what choice is best for you. Some of those factors to consider include life expectancy considerations. Your pension will continue paying as long as you live. You'll also have different options when to make it where it's possible that your beneficiary can receive a piece of your pension. You also have to look at the viability of the pension plan. A number of situations could put your pension at risk, including underfunding, mismanagement, bankruptcy, or legal exemptions. Laws exist to protect you in such circumstances, but some laws provide better protection than others do. You also have to look at your risk tolerance and your need for guaranteed income. The funds in the pension are invested at the discretion of the fund manager. Sometimes this is invested in a way that's consistent for what makes sense for what you need, and then sometimes they're not. If you take the lump sum, you'll have control over the investments, which may or may not be a good thing because now you're on the hook for creating that retirement income. You also have to look at wealth transfer considerations. I mentioned earlier about when you're ready to start collecting your monthly payments from a pension, you'll have several options to pick from. The highest monthly payment will be a pension that stops paying you when you pass away. You'll have more control of what happens to those funds if you take the lump sum. And there's more things to consider. So what we're doing is we're providing a flowchart to help you with that decision. You can download a copy of the flowchart at bautisfinancial.com/pension lump sum. As you can realize, it's an important decision, and you remember that everyone's decision or analysis on this is unique. While the flowchart definitely serves as a valuable tool, we obviously encourage you to consult with a financial advisor and just make sure that this decision or you tailor this strategy along with everything else you're doing with regards to your retirement. There's a couple ways to do the analysis. One way to evaluate a pension buyout involves determining what your future pension payments are worth today, and then comparing that value to what the buyout offer is, and then obviously whatever one is bigger, that's the one you go with. Another way is you can use a ratio to compare the monthly payment amount versus the buyout amount, and it's kind of high level. And obviously, like I mentioned, decisions is unique to you, and what makes sense is unique to you. So our team's available to guide you through these considerations and empower you to make that confident decision regarding your pension.